What is going on, traders? Welcome back to the Traveling Trader. The time has finally come. On Monday, Tesla and Apple stocks will finally split. Tesla should be trading at around $4.40 a share, while Apple will be trading at around $125 a share. I've done countless videos now on how to trade Tesla leading up to the earnings, how Tesla would react if the stock split is announced. But the goal of this video is to give you some stocks and options trade ideas. Whether you missed the boat here or you already own Tesla and Apple shares, maybe you're thinking of adding more to your stash. So I'm going to give you 4 trading ideas based on data and evidence, and I guarantee that you will find one or more of these helpful according to your trading style and your risk profile. So first, I'm really quickly going to go over how the stocks reacted to their split announcements and how they reacted thereafter. Then we'll look at some of the trades we already did, the stocks and options trades we did. And lastly, I will give you my top 4 trading ideas for trading the Tesla and Apple stock splits. And guys, if you get anything out of this video, leave it a big fat thumbs up. Leave it in the comment section below and let me know if you're planning on entering after the split, or if you currently hold shares of these 2 companies. And make sure you follow me on the social media listed below here, especially if you're interested in travel and photography. And if you want access to all of my trades, my stocks and options trades, link is in the description. We have a vibrant community of over 700 traders. We exchange ideas, topics, strategies, etc. Link is in the description. Without further ado, let's get right into it. All right, guys, back at the desk. Let us take a look at Apple's stock price, and then we will go over Tesla's. Let's see how it reacted on the day of the announcement and thereafter. Looking at Apple's chart here, we're up 123%. By the way, my cost basis on Apple was around $225. I did send that out in the trade alerts back at during the 3rd week of March, but that's besides the point. Right here, this arrow, July 30th, this candle right here, this is when the Apple stock split was announced, and it gapped up almost 11% the next day, saw a healthy rally, and then stagnated for 3 or 4 days before the last day of trading before the split, which was August 28th. Come August 31st, on Monday, the new split price will take effect. And if you followed my Tesla split video, I went over this analysis by rightline.net. They reference a study of thousands of stock splits before and noticed that there was a trend that takes shape during a stock split. And so far, Apple is following that exactly, following it to the T. During the announcement, there's positive publicity, drives the stock price up, a little bit of dormancy. Of course, with Apple and Tesla, there wasn't a lot of time between the announcement and the actual split. And then there's the pre-split run, which you see here, this rally, and split execution. This is the day of the split, which is August 31st. Now, what the studies show is that the day of the split provides the final announcement. It's just one more signal to the trading public that, hey, remember, this badass company, this badass stock right here is splitting. So we tend to see a little more hype trading that day. And then, of course, after the split, traders are tempted to take profits. I know I will be, since I got in at $225. The split price on Monday, by the way, is going to be around $125 because Apple's doing a 4-for-1 split and it's trading around $500. All right, that was Apple. Let us take a look at Tesla and see how it reacted to the split. As you know, Tesla had announced its split on August 11th, right here where the green arrow is, almost same type of price action as Apple. The next day, we saw a 13% incline, similar to the 11% incline that we saw with Apple. And then you have the pre-split rally, finding some resistance the last 2 candles here at around 2,300. And again, going back to the right line study, split execution is the same day as Apple. It's going to be August 31st. Tesla's share price, they're doing a 5-for-1 split, will be around $440 since they're trading at around $2,200 now. So you have to divide that by 5. Now, one more thing we can do is look back at Apple's history and see how, because Apple has split a million times before. So the last time that Apple split was June 9th, 2014. So if we take a look at June 9th, 2014, we can see how Apple reacted the day after the split, or the weeks after the split. So on June 9th, we saw a rally of about 2%. The next day, another rally of about 0.5%. And then it started stagnating, and we saw a drop off in the couple of weeks following of about 5%, a little over. This is the post-split depression. Depression obviously used very lightly here. The time before that, Apple split February 28th, 2005. So let us take a look. Obviously, a much different market landscape at that point. We didn't have all these crazy Robinhood traders. We didn't have Wall Street bets. The world was grim at that time. So let's look at February 28, 2005, and you'll see that a very similar thing happened. Here is February 28th, 2005. We saw some stagnation, and then following the split, we saw about a 14% drop to the 50 moving average. Now, here's what might be different is with Tesla, there have been a lot of rabid fans waiting to get their hands on shares of Tesla, and the price just kept going up. So we could see a scenario where the rally post-split takes a little bit longer than usual, but everything retraces to the mean. Mean reversion is just a thing in nature, and we definitely will see Tesla retrace at some point, and that will be part of the strategy, which I will talk about in the last segment about how to trade Tesla and Apple. All right, guys, so I'm going to get into a couple of trades we had on Tesla and Apple and show you what's possible in these scenarios. And then I will go over my top 4 trading strategies for Tesla and Apple post-split. Let's get right into it. So on August 21st, I opened up a call credit spread, the 2300, 2350 strikes on Tesla, expiring August 28th. I was purposely gunning for a short expiry because I wanted to take advantage of that volatility. And the 28th was the last full trading day before the split. Now, the reason that I picked those strike prices is on the 21st, there was some uncertainty on this candle on Tesla's chart, and the 1.272 fib level was at 2200, which coincidentally was where it closed at. So I was comfortable opening it at 2300, 2350. Also, the deltas on that 2300 strike price was 0.18, so under 0.2. Options traders use delta to loosely estimate what is the probability that something will be in or out of the money. So you can read this as an 82% probability, roughly, that this will be out of the money. Meaning, if it expires worthless, then I keep this entire credit of $4,575. Like I said, I ended up closing this position on the 25th for a couple of reasons. One, that day ended up being a green day, a green candle. There was about a 0.5% increase in Tesla's price that day. And two, my max profit was $4,575, and I was already up $3,125. So I ended up closing it because I booked most of the profit. No need to leave myself exposed to the market for more days than I have to. So I ended up closing that. But I also opened up a credit put spread that day. Now, why did I do that? Well, because Tesla's price for the last couple of days before that, or last day or two before that, has already dropped. So the put value went up. So I wanted to sell a put spread and make money from that as well. Now, selling a put or a credit put spread is technically a bullish position, and the stock price has to finish above your strike. So on that day, the 25th, I ended up opening the 1900 1890 put spread. Again, this is a credit position, meaning I'm selling the put spread and I need Tesla to finish above 1900 on August 28th. It was a no-brainer for me. And again, staying right around that 0.2 delta, just shy of that. This one had a 0.19 delta, meaning roughly an 81% chance of finishing out of the money. This one, I ended up letting it expire, and I kept the entire $3,225 credit. And by the way, if you're having trouble trading options or with your technical analysis and would like one-on-one training with me, I offer that. I only take a handful of people every month. Slots go really fast, so check with me on the 1st of every month if you want to get in for that. The sign up is on my site. Link is in the comment or the description below. You can also join our vibrant community where everybody talks strategies and learns from one another, and I would love to have you on board. Now on Apple, I actually got hella lucky because on Apple, I didn't have any positions post the announcement. I didn't open any new positions. I bought Apple really early. It was during the week of the stimulus. And yes, I sent that alert out here. I bought it for around $225, and I bought a crap load of Apple. I mean, it was like a 30 or 40% discount from the highs at that time. But on the 21st, I sold the 367.5, 362.5 put spread on Apple. And what do you know? Funny enough, Apple actually tanked almost 9% from that August 21st date. And it's funny because I thought Apple and Tesla only go up. But anyway, so I took half of the positions and I actually rolled them out to December 18th.
got more credit for that, turned it into a $10 spread, 360, 350 spread, and I kept holding the rest. And what do you know, on the 31st, they announced the split, and my Apple options were up 90%. Obviously, I closed them. I had 2 weeks left. Took most of my credit, 90% out of 100. I wasn't going to leave the position open just for the hell of it. But yeah, you could see here, this is where they announced a split, this huge gap up. And Apple, like I said, gained 10, 11% that day. All right, let us get into the really juicy stuff. Here are my top 4 trading strategies for Tesla and Apple after the split. Now, if you followed my previous Tesla split videos, I was saying that the simplest strategy, the one that is the least sexy, is sometimes the most effective. And based on the research that I found on rightline.net and also my previous experience, I knew that on the day after the announcement was the time to buy. And we had Tesla here sitting. It's crazy because it was under 1,400. It was 1,365. And it was sitting at the 21 EMA for over 2 weeks, almost 3 weeks. And if you had bought the day after the announcement, you would be up right now about 51%. And on Apple, if you bought the day after the announcement, you would be up 21%. Now, most stocks that actually split go on to have insane long-term rallies for years to come, because the companies behind the stocks that can justify a split are usually the successful ones. So this will actually be the 5th time that Apple splits, by the way. Now, the reason I bring that up is because strategy number 1, if you're a long-term holder, you just buy and hold. Again, I know that sounds simple. I know that sounds unsexy, but if you haven't bought already, you would buy the day of the split and you would just hold it. And you might suffer some bumps for the following 2-3 weeks because of this post-split depression that we talked about. But again, if you're the type of trader or investor that's a long-term holder, you wouldn't worry about those incremental bumps along the way. Number 2, wait for a retracement. If you have a rudimentary understanding of charts, you are doing yourself a disservice by not buying at the retracements. You don't believe me? Watch. Let's look at Apple on the weekly chart, right? A more longer-term chart. If you had just bought Apple, let me just take away the other moving averages. If you just bought Apple on the 21 EMA and held, every time that Apple hit the 21 weekly EMA, this white line, and held, you would be a rich MFer right now. And if you were more patient, you can wait for one of the higher moving averages, right? The ones with the higher value. So like the 200 moving average on my chart is the green one. Now, it doesn't hit the 200 weekly MA, but for once every few years. But if you load it up, and I mean load it up at the 200 moving average, every time it hit the 200 moving average, then you are getting yourself the best entry. Yes, they say that you can't time the market, but you actually can. And it's not so much time, but it's identifying where there's an optimal entry. And on stocks, on blue chip stocks like Apple, Microsoft, Amazon, Home Depot, McDonald's, Nike, if you buy at the major moving averages, if you take a look at a long-term chart, and you buy at the major moving averages and hold, you can probably retire with a harem of whatever you're into in whatever destination you desire. And let's take a look at Tesla. Obviously, it doesn't have as much history as something like Apple, but if you bought every time that it sank to the 200 weekly moving average, you'd be sitting pretty right now. So that is strategy number 2, wait for retracements and then significantly load up at those retracements. And I should say, I'm not a financial advisor. Do your own research. Obviously, you're going to do what's beneficial according to your risk tolerance and your budget, as well as your livelihood needs. This is just to give you some ideas that you might not have thought of in your trading journey. Strategy number 3 is buy single call options at the first sign of a retracement. Now, this is a bit riskier only because we're dealing with options and options have expirations. But the pundits and the general public never talk about this as a benefit of splits. They always say, oh, splits are meaningless. It's just a shell game. It doesn't really mean anything. It's like exchanging a $20 bill for 4 5s. But no one ever talks about the effect that splits have on options prices. So if you take a look at something expensive like Tesla, and you look at its options prices, if you wanted to buy, for instance, the 2250 call expiring December 18th, this is going to cost you $4,000 for every option. However, after the split, we're now not going to be talking about $22.50. We're going to be talking about $450. And instead of $4,000, this option can be worth around $800. So one of the huge benefits of splits has to do with cheaper options prices. And with that, you'll also get cheaper spreads, because notice that, these spreads spreads right, if you were going to do a spread between 22.50 and the next price up, that's a $50 spread. That's a lot of risk. So with cheaper stock prices come cheaper options prices and narrower strikes in your spread. Now, the reason that I would buy a single call on both Tesla and Apple at the first sign of a post-split retracement is because some of the crazy events that they have coming up. One, the split itself is going to induce a lot of buying from people who have missed the boat and have watched these stocks rally into oblivion. But two, both of these companies have major events coming up in the fourth quarter, right? So the release of the iPhone 12, which is a new flagship, fully redesigned model. There's almost certainly going to be an unprecedented number of people upgrading, since this will be a new model, a new design, and the first 5G phone that Apple produces. So Apple could experience an uncharted sales boost with regards to phones this year. Now, for Tesla, you have Battery Day coming up in September, and maybe even more importantly, the next milestone for its stock, which is finally inclusion in the S&P 500. It met all the criteria, it qualified. I talked about this in a previous video, and just like I saw the stock split coming, I see the S&P 500 inclusion coming, and this will undoubtedly boost the volume even further on Tesla stock, just by virtue of being included now in a lot of funds, in a lot of S&P based funds. All right, and trading strategy number 4 is not for the faint of heart, but it's called a cash covered put. Now, a cash covered put is a win-win for those that have the capital and want to own at least 100 shares of the stock. Essentially, what a cash covered put is you would be selling a put, and remember, selling a put is bullish, but you would be selling a cash covered put at a lower price point with the hopes of achieving one of two goals. Either the stock price never makes it to that level and you keep the entire premium. So let's just say on Tesla, for instance, you sold a cash covered put expiring in December at 1,700. Tesla stock price is now 2,200. Obviously, this is before the split, but say you sold this cash covered put here, you will be getting a credit of $15,870 for every put that you sell. But this is not free money. You are agreeing that if Tesla falls below your strike price of 1,700, you will be purchasing 100 shares of Tesla stock at 1,700. So it is really a win-win for a stock that you want to own, but you don't want to pay current market prices for. And if the stock price doesn't fall to that level, then you end up keeping this entire premium. Now, it's called a cash covered put because you have to have the cash available to buy the stock in case the stock price actually hits below your strike. So in Tesla's case, it's a little extreme because you would need $170,000, which is 1,700 times 100. But remember that Tesla's stock price is going to split and everything will be divided by 5. So cash covered puts will be a lot cheaper. Now, this is the strategy that I'm probably going to partake in the most because I own a lot of Tesla. I own a lot of Apple. I got them really cheap. I'm just going to hold them through the split, obviously, and I don't really plan on selling them. However, due to the cheaper option prices, everything's divided by 4 on Apple, divided by 5 on Tesla, we'll be able to sell cash covered puts for a much more reasonable amount than $170,000. Anyway, that is it for this video. I hope you got something out of it. In my next video, I will be doing an update on the sweepstakes. If you don't know, I pick a random comment at the beginning of every month and go all in on that stock or option, whatever it is that you pick. I have about $1,000 in this account, and whatever the profits are, I will give them to the person who won. So leave it in the comment section below. Let me know what stock or options play you want me to pick for the month coming up. Again, leave a big fat thumbs up, subscribe to the channel, hit that notification bell. If you need help figuring out how to trade options or you want help with your technical analysis, sign up for the one-on-ones and or our private trading group. Stay safe out there, traders. Peace.